China's yuan has replaced the US dollar as the most traded currency in Russia, a year after the invasion of Ukraine led to a slew of Western sanctions against Moscow. The yuan surpassed the dollar in monthly trading volume in February for the first time. The difference became more pronounced in March, according to data compiled by Bloomberg based on daily transaction reports from the Moscow exchange. Before the invasion, the yuan's trading volume on the Russian market was negligible. Nowadays calls to move away from relying on the US dollar for trade are growing. Not everybody likes playing by US rules. Russia and China would like to call a halt to dollar hegemony, and they're not the only ones. In 2019, Malaysia's then Prime Minister Mahathir Mohamad proposed the idea of a common trading currency for East Asia that would be pegged to gold. More and more countries, from Brazil to Southeast Asian nations, are now calling for trade to be carried out in other currencies besides the US dollar. The US dollar has been king in global trade for decades, not just because the US is the world's largest economy, but also because oil, a key commodity needed by all economies big and small, is priced in the greenback. Most commodities are also priced and traded in US dollars. But since the US Federal Reserve embarked on a journey of aggressive policy rate hikes to fight domestic inflation, many central banks around the globe have raised interest rates to stem capital outflows and a sharp depreciation of their own currencies. To be clear, the US dollar remains dominant in global forex reserves even though its share in central banks' foreign exchange reserves has dropped from more than 70% in 1999, IMF data shows. The US dollar accounted for 58.36% of global foreign exchange reserves in the fourth quarter of 2022, according to data from the IMF's currency composition of foreign exchange reserves. Comparatively, the euro is a distant second, accounting for about 20.5% of global forex reserves while the Chinese yuan accounted for just 2.7% in the same period. China is one of the most active players in this push given its dominant position in global trade right now and is the world's second largest economy. IMF's data on the 2022 direction of trade, mainland China was the largest trading partner to 61 countries when combining both imports and exports. In comparison, the US was the largest trading partner to 30 countries. As China's economic might continues to rise, that means that it'll exert more influence in global financial institutions and trade etc. China, long among the top two foreign holders of US treasuries, has been steadily reducing its holdings of US treasury securities. Mainland China held nearly $849 billion of US treasuries as of February 2023, the latest data from the US Treasury Department showed. That's at a 12-year low, according to historic data. But China isn't the only country calling for a shift away from the US dollar. Brazilian President Lula made a state visit to Beijing in April where he reportedly called for reduced reliance on the US dollar for global trade. Trade between Brazil and China reached $150 billion in 2022, a 10% jump from a year ago, according to S&P Global Market Intelligence. During a recent visit to China, Malaysia's Prime Minister Anwar Ibrahim was said to have suggested setting up an Asian Monetary Fund to reduce reliance on the US dollar. In an April 6 interview with CNBC, Malaysia's Trade Minister also acknowledged Malaysia's concerns about Asia's dependency on the US dollar. At the ASEAN Finance Ministers and Central Banks meeting in Indonesia in March 2023, policymakers also discussed the idea of cutting their reliance on the US dollar, the Japanese yen and the euro and moving to settlements in local currencies instead. In early April, Indian media widely reported that the Ministry of External Affairs had announced that India and Malaysia were starting to settle their trade in the Indian rupee. Pakistan, a longtime US ally, recently closed an oil deal with Russia and is trying to buy black commodity in any other currency, which the government calls friendly currency, than the US dollar. Analysts say changing global economic dynamics are driving the so-called de-dollarization trend which can benefit local economies in a number of ways. Trading in local currencies allows exporters and importers to balance risks, have more options to invest, and have more certainty about revenues and sales. Another benefit for countries moving away from using the dollar is the middleman in bilateral trade is to help them move up the value chain. Meanwhile, the growth of non-US economic blocs also encourages these economies to push for wider use of their currencies. The IMF estimates that Asia could contribute more than 70% to global growth this year. Geopolitical risks have also accelerated the trend to move away from the US dollar. Economic analysts say that political risk is really helping introduce a lot of uncertainty and variability around how much of a safe haven the US dollar really is. What accelerated the calls for de-dollarization was the US decision to freeze Russia's foreign currency reserves after Moscow invaded Ukraine in February 2022. To punish Russia for invading Ukraine, Western governments froze $300 billion of Russia's foreign currency reserves last year, roughly half the total, and expelled Russian banks from the SWIFT international payments system. This forced Russia to switch trade to other currencies and increase gold in its reserves. So-called dollar weaponization has rattled many countries and not just Russia. Countries willing to continue to trade with Russia, like India and China, have started doing so in rupees and yuan instead, triggering talk of the de-dollarization of the international trading order. After US sanctions, the yuan replaced the US dollar as the most traded currency in Russia. In the Middle East, major oil exporter Saudi Arabia has reportedly signaled it's open to trade in other currencies other than the greenback. Despite the slow erosion of its hegemony, analysts say the US dollar is not expected to be dethroned in the near future, simply because there aren't any alternatives right now. Euro is somewhat an imperfect fiscal and monetary union. The Japanese yen, which is another reserve currency, has all sorts of structural challenges in terms of the high debt loads. The Chinese yuan also falls short, the analysts say. If you look at the yuan reserves as a share of total reserves, it's only about 2.5% of total reserves, and China still has current account restrictions. That means that it's going to take a long time for any other currency, any single currency to really usurp the dollar from that perspective. Data from IMF shows that as of the fourth quarter of 2022, more than 58% of global reserves are held in the US dollar. That's more than double the share of the euro, the second most held currency in the world. The international reserve system is still a US reserve-dominated system. So long as that commands the majority, so long as you don't have another currency system or economy that's willing to step up to that international reach, convertibility and free floating and the responsibility of a reserve currency, it's hard to say the dollar will be displaced over the next 3 to 5 years, unless someone steps up. Reports of the death of the dollar have been around for at least 50 years, but it hasn't happened yet. However, the dollar is in a weaker position with moves by China, Russia, Saudi Arabia, India and Iran to move away from pricing and trading energy in US dollars. The global economy is hardwired to the US dollar, but as China's influence and power grows, that could change as more countries start using the yuan. King dollar is a long way from losing its crown, yet, after a century, it is finally facing a serious challenge to its power.